Alright, hello guys and welcome to our second course about Forex trading, where we are gonna talk about what is exactly Forex trading and how it works. So let's start. Alright, the first thing that you guys want to understand is that Forex trading is not the only way that you guys can trade on the markets. There exists a lot of different markets in this world, and there are three popular and a lot of other difference. So let's start with the first one, which is the stock market. So what is the stock market? Stock market, well, a lot of people talk about it, and I think you guys have a small idea about it. But normally, well, stock market is simply a market where you have all the public businesses that exist. And the goal here can be, well, you can trade on the stock market, you can invest on the stock market. There are different ways that you can, well, actually trade there. You can speculate or you can invest. Normally, the stock market, what you can do is, let's say, for example, you buy a part of, you buy a share. When you buy a share of a business, this means you buy a part of this business. In other words, let's say you buy a share of Apple. This will mean that you buy a certain part of Apple. So if Apple drops a new product and the value of Apple goes up, well, guess what? The value of your share will go up. But once again, if something bad happens with Apple and the value of Apple goes down, the exact same thing will happen with the Apple shares. It will go down. So this is a way that you can invest in the stock market. It will be by buying share. It's a very popular market, but it's more harder to work with than the Forex market, because on the Forex market you have some currencies. You have, let's say, if I'm not mistaken, 20 or 25 pairs. But on the stock market you have hundreds and hundreds and hundreds of businesses that exist. Another way that you can invest you can put money on the stock market will be investing your money. In this case, it's a bit different because you will not speculate. You will, let's say, study a business and you will put money in this business and just let this money work for you. In other words, let's say you bought Apple 10 years ago and you just kept the share and let it, let's say, grow slowly. What happens when you invest in the stock market in blue chips businesses? You will get also dividends, so you'll get dividend payments. This means, let's say you invest $100,000 in Apple, you buy $100,000 worth of shares. Well, Apple will pay you a dividend, let's say, once again, it's just an example, of 2%. This means you will receive 2% just for holding those shares. So just for holding shares, you can receive money on the stock market. And also you will gain money if the value of the share goes up. So if the share value goes up, well, you will gain money, and also you will have a dividend payment once a year, which is, well, as you can see, very, very interesting. So as you can see, those are ways that you can put money on the stock market. The second market that we are going to talk about will be the Forex market. In this case, it's simply the market of money, of currencies. And how you make money on the Forex market, it's very simple. Let's say, for example, you buy a dollar. Let's say the value of the dollar for a euro is 1-for-1. So I know it's not true, but let's hypothetically say that this is the value. So it's 1-for-1. So let's say right now you have your $1, you buy 1 euro. So you own 1 euro. Let's say that the value of the euro goes up, so the value of the dollar goes down. So right now it's one euro is worth $1.10. This means that just by buying 1 euro and by holding this currency, you made 10 cents for each dollar. So you made a profit of, let's say, you made a profit of 10%. This means that, let's say you bought $1,000, 1,000 euros worth of dollars. So you bought 1,000 euros with your $1,000 on day one. On day two, when the value of the dollar went down, and right now it's 1 euro for $1.10, you just gained $100 just by holding the euro. So you understand right now how works the Forex market. Same thing if, for example, the value of the currency goes down. So let's say you have $1 for 1 euro, and right now you exchange your $1 for 1 euro, and the value of the euro goes down. So right now it's $1 for 1 euro and 10 cents. So once again, you'll receive less dollars. Then you will get less dollars. than you had on the first day because the value of the euro went down. Alright, so you understand how you can win and lose money on the Forex market. Next thing will be the option market. I don't want to go too much in depth in the option market because it's a bit more complicated, and this course is really about the Forex market, but it's very important for you guys to understand it. So the option market, what is it exactly? It's simply a market. It works, let's say, it can be like an insurance. So it's simply a way for you guys to limit your risk and try to maximize the reward that you get. So let's say, for example, we'll stay with our $1 for $1. So let's say you want to buy, you have $1 and you want to buy €1, but you don't want to take risk. You don't want to take a huge risk, and because you don't want to lose your dollar. So what you will do, you will say, okay, I'm ready to buy euros only if the value of the euro goes higher than will go higher than let's say 10 cents. So it's gonna be $1.10 for €1. So only in this case I will buy, let's say, my euro. Let's take a simpler example. You have one share, and you will buy the share only if the value of the share goes higher than, let's say it's $100, it goes higher than $110. So if the value of the share goes higher than $110, you will buy the share. If not, you will simply not buy the share. So let's keep this example in mind. All right, so right now you are buying one option. You are buying the option of buying a share if his value is higher than $110. The value of the share right now is $100. Let's say the value of the share goes to $130. So right now you have the right to buy your share at $100 when its value is $130. So you will earn $30 on your share minus your primus, because this is what you have to pay to take the option. So you just made $20 and you only risked, let's say, those $10 that are the prime. But let's say in the other case, the value of the share goes from $100 to, let's say, $1. So instead of losing $99, you only lost the value of the prime, because that's the only thing that you will guys pay to be able to invest in the option market. Once again, this is the basic of the option market, and it's a very nice thing to use to be able to cover your position. But we'll not talk a bit more in depth about it because, as I said, this course is really about Forex market. All right, you also have other markets. In this case, you can, for example, have the oil market, the gold market, the beans market, the soy market, the coffee market. You have hundreds of different markets that exist. And when we will create your account with the broker in our next class, you'll see that some brokers not only offer you the possibility to trade the Forex market, but will also offer you the possibility to trade some other markets. It could be the stock market, it could be the gold, let's say silver. You will have the possibility to trade different markets. You'll see. All right. So this is for the popular markets. Right now you understand that you have two popular markets, which are the stock market and the Forex market. You can take options on those markets, and you have hundreds of other smaller markets. Next thing, who are the players in the Forex market? So the Forex market is a very, very huge market. And it's important also to know that it's a zero-sum game. This means if, for example, I win $1, someone has to lose $1. If I win $1 million, someone on the other hand will have to lose $1 million. No money in this market appears by magic. So there is no money that will appear by magic. Someone invested money and someone lost his money. So if someone loses money, someone can win money. And on the other hand, if someone wins money, well, someone have to lose money. So the major players on this market will be the banks and the financial institutions. Those are huge players in this market, and principally what they do is not trading. Yes, they have a trading floor, and yes, they have small departments that trade Forex. But the most important thing that they do is they will guarantee exchange rates for businesses. So let's say a business takes a loan of, let's say, $10 million. Well, the bank will guarantee the exchange rate in, let's say, for example, 3 months for this $10 million. So they will pass huge transactions from that has money in it, and this can make the forex market fluctuate, because yes, they are not trading, they are simply guaranteeing exchange rates, but once again, this can move the forex market. The second big players will be hedge funds and investment firms. Those players are very, very, very huge, because they have a lot of money, but also they have very experienced traders. They have expert advisors, so they have robots. They trade with robots. It's very automated, their trading, and they have a lot of knowledge. So those are very, very important players to take in consideration. They trade, so their main goal is to trade, is to make money by speculating on. It could be the forex market, it could be on stock market, it could be on many markets. There are some hedge funds that are specialized on some financial products. So that's the goal of hedge funds and investment firms. And finally, you have the private traders. Private traders are traders like you and me, who try to make money by investing in this huge market that is the forex market. So that's for our big players. And right now you understand that forex is it's a zero-sum game, and there is no money that can be printed in the forex market. That is printed in the forex market. Sorry. So right now we want to understand how a transaction works on the forex market. So basically, what you do, you simply when you trade on forex, you simply buy a currency, you exchange a currency for another currency, and for this service, you pay a small fee, which is the commission. If, for example, let's say you are going in a place that exchange money, well, you can go there and exchange your $1 for, let's say, €1, and for this service, you will have to pay a small fee. That's the exact same thing when you trade currencies. You simply exchange one currency for another currency, and for their service, you will pay a certain fee. And your goal here is to make profits. On the other hand, when, for example, you do this on your everyday life, you exchange money, you exchange a currency for another currency. It could be, for example, because you went on a trip or you just visiting another country, so you have to do it. But you can also do this, to win money, so to do profit. And in this case, you will have to work with a broker. So how a transaction works, it's very simple. You open up your account, your account with your broker, and you simply place an order. So your goal here will be to place an order with a certain broker. You will ask a broker to open up a transaction when the value of a currency when the currency will have a certain value. So for example, you want your broker to open up a transaction when the euro will be equal to the dollar. So it's going to be 1-for-1. So the broker will not open a transaction until this happens. So as I said, the goal of the broker is really to open up transactions for you and close transactions for you. Also, the goal of the broker is guaranteeing the safety of your funds. So when you're giving him funds to be able to trade, well, the broker guarantees the security of your fund. That's his job. And so as I said, the main goal of broker is passing transactions. So guaranteeing that a transaction passes at a certain time and at a certain price, and also guaranteeing the security of your funds. So when you want to withdraw your money, the broker has to give you your withdrawal. It's your right. If there is, any other thing that is associated with the security of your capital, the broker has to guarantee this. All right, so right now you know what is Forex in general and what exactly it is and a bit how it works, who are the main players, what are the different markets that exist. The next goal will be to choose the right broker and create an account to start your trading journey. So that's it for this course, guys, and see you all in our next class.